All right, so what you want to check first is you want to come to the higher time frame, right? And then you want to look for a sweep, a break, and structural liquidity left behind. Okay, so we can see that there is actually a sweep here. This is the daily time frame, which is the highest time frame we can get on TradingView for the right? So we just start with it. So you can see that there's a sweep here, right? No matter how small, a sweep is a sweep. Okay, so you can see that there's a sweep there. All right, and then we can take this as a structural liquidity, this point. Okay, so this is our protected high. Okay, so this entire area around here is your QMR. Okay, but for me, if I don't see that single candle, I'll drop down to, let's say, 8-hour time frame to try and look for it.
Okay.
If it's still too big, like this one, okay, I can take the entire body, but I could drop down to the 4-hour time frame as well. Okay, so on the 4-hour time frame, I could use this entire area like that.
Okay.
That's my clear mark. You can see there are green candles there.
Yeah.
These green candles. Okay, so I could use the entire points as my clear mark right there. Okay, so now if we come back to the daily time frame, which level based on this trading range? You know, this is my trading range. Right? This thing I marked out, I just didn't tell people the technical terms and stuff, but this marking, the way you call it, this is a bearish QM, right? I expect price to come in here, tap in and sell, okay? And then the target will be where? This point here.
This point, yeah.
Okay, so I'm going to be looking for sales from this point all the way, okay? So now let's drop down. Let me just save this just in case.
I think I have one question here.
Okay.
This range, where you said you're expecting a price to reach.
Yeah.
Yeah, here. Yeah.
Yes.
Assuming it wasn't formed, right? Assuming it wasn't formed.
Okay.
Assuming it hasn't been formed yet. How do you know your range?
Okay, so this range would have been formed because that's the point where your reversal starts, right? And then when your reversal starts, where you're expecting it to come to? You're expecting it to come here and then drop. Why? Remember, this sell model we have here, it's a QM bearish sell model. This is the trading range. So typically at some point, price is going to come back there, tap in and continue dropping.
Okay.
Now you see that here, price reversed, but it didn't come into that range. It continued dropping. Price reversed, didn't come into that range, continued dropping. Reversed, didn't come into this range, continued dropping. So it's at this point that the reversal actually starts and comes in here. That is when your trading range is now defined. Do you get? So here, the trading range is now defined. But there's something else that actually defines this trading range, right? So the truth is, we learn every day, okay? There's something else that defines this trading range, okay? That defines this entire trading range, something that will happen. So basically, inside here, a bullish pattern, a bullish QM would have formed that would have led to this reversal. Okay, so there's something I'm currently studying now, which, because we study every day, there's something I'm currently studying now that if I get it right and I backtest it, then I'm going to be showing you guys. Okay, but a bullish QM would have formed in here. Let's see. Let's go to the 4-hour time frame. Let me see. This is something I'm just studying.
Okay.
Okay, so on the 4-hour time frame, I'm saying like a bullish QM form. And what determines a bullish QM? Basically, your QM is what? You want to see a sweep and a break of structure to the opposite direction, right? So here at this point, am I seeing like a sweep? So I'm saying here, this is it. So I can delete this one. So inside here, this is like a sweep. If you go to the lower time frame, you will see. And this is a break of structure here. This was a bullish clear on the 4-hour time frame, right? Now, your point of interest here can be this unmitigated wick right here. And price came in there, tapped in, and started buying. So this entire thing here that I marked out is called it's a QM. It's a Quasimodo, right?
Yeah.
Or it's a bullish QM. It's the move that actually led to price buying from this point, right? So typically, where will price come to take out? That sell that started, where will price come to take out? It's actually going to come and take out this low. Right? Well, it can take out this low because why? Liquidity is resting below it, equal lows, and all of this trading rate. So I'm sure on the 4-hour time frame, if we go here, we are going to see a bearish QM form right here, which is this. This is the sweep. This is the sweep. Now I've dropped down to the 4-hour time frame to explain this to you, but this is something I just learned. Okay.
Okay.
I'm still learning. This is because let me give you a little backstory. Okay. Sometime in January. Now, yes, we teach structure, we teach sweep, break, and then inducement or liquidity, and then take your trade, right? But then, even though we trade like that, you discover that we have to wait for a long time for our trades to play out.
Yeah.
Okay, for price action to be in our favor, right? So the guy asked the question. He was like, that was in January. He asked the question. I was like, okay, do I have to wait this long? Isn't there something I can see that'll make me realize that, okay, the move has started? Do you get? So that was the question he asked.
Yeah.
Right. And so ever since then, I've been trying to look at charts too, but now I'm making headway. Right. So you are seeing a sweep here, and you are seeing a break of structure here in the 4-hour time frame. Remember, we started from the daily time frame, which we already have our QM form based on how we trade. Right. This is just a little tweak to it. Right. So here now, the other block that led to this break of structure is this last green candle, right? But I'm on the higher time frame. I can always use a wick, right? This is an unmitigated wick. Price hasn't come there before. So what happened? Price came there, tapped in, and started dropping, right?
Okay.
And started dropping. And so on the 4-hour time frame, typically my trading range is from this bearish QM that swept, broke structure to the downside, and started selling all the way to that point, to this point on the 4-hour time frame, right? So basically, in a bearish range, you are going to have a strong high, which is this high. That price will not break, will not be able to break. And that strong high, remember, is our what? Protected high in this case. Okay? This is a sweep. This is a break of structure to the downside. Price comes back to the unmitigated wick here, or another block, any POI. An unmitigated wick is a POI because a wick is another block on a smaller time frame, right? So you know that this is another block, right? But instead of dropping down to the smaller time frame again, I'm simply using the wick, okay? And you can always use the beginning of the week or 50% of the week as your entry. So you see that this one didn't get to 50%, but yeah, I just mentioned it so that you know that, okay, that's also a possibility. Okay, the same way you use 50% of an imbalance or 50% of another block. People have different things that they seemingly want to use. Okay, so once I figure all of this out, it's something I'm going to be teaching you guys as well. So with this, what I'm trying to figure out now is there's always time correlation. Okay, there are always pairs of time frames that you want to use in order to make your trading strategy mechanical. Okay, in such a way that you don't have to think too much before you actually see see your strategy. Okay, so you sort of like make it mechanical. So once I figure all of that out, it's still the same thing we are doing, structure and break inducement, same thing, right? But we are only now making things a lot faster for us by trading exact trading ranges based on some certain time frames. Okay, so if I see my QM form on H1 now, or if I see my QM form on M15, which time frame can I drop to confirm that trading range and then trade within that time frame? It can be the 1 minute time frame. Do you get? So that's basically what I'm trying to. That's what I'm trying to do. Okay. So I've been doing that for a while now, but I seem to be making headway now. So basically, what I do is when the market is in marketing, I try to study. Use that period to just study. You get. So that's what I do. So I'm never under pressure to trade like that, right? Even though I'm trading, I still took a trade on V25 yesterday, but it's a scalp trade. So such trades are usually difficult for me to share. I like to share like swing trades, like the way I shared V151S, but it still went into our POI and then hit our TP1, which I had mentioned that yes, price could possibly do that. Okay. You get. So I like to share swing, but most of the opportunities I've been getting now are scalp trades. I will typically just take those ones myself. You get, because before I call it out or anything, people will miss it. You get.
I think I'd love to learn that too.
Yeah, no problem. It's the same concept. Same thing. Same thing. Yeah, same thing. But no worries. I'll show everybody as well. All right. So again, coming back to the daily time frame, right? This is our QM here. So what we just did was we just went slightly deeper in order for us to see price action a lot clearer. Okay, so this is my QMR here, my protected high here, my SLQ, structural liquidity here. Price comes into structural liquidity, taps into our POI. Now, from that point until this target here is taken out, we are going to be looking for what? Sells. Okay, so now let's drop down to the 4-hour time frame and let's try and look at, do we see the same thing as price is moving? Sweep, break, structural liquidity, all the way like that. If you don't see it on 4-hour time frame, you can typically use 1-hour time frame, okay, which I like to use a lot. All right, so let's just take a look from the 1-hour time frame. From the point structural liquidity was taken here and price came into our POI. Till the end of this target, we should be looking for what? Sells. Okay, so now let's look at price together. And you can basically see here that supply is actually in control, right? Look at this other block here. This other block here got respected, right? Supply is in control. Look at this right here. Supply is in control. Right? So we know that, okay, yeah, we're in the right direction of the market, basically. So now we want to look for our sweep, break, structural liquidity, and you get. Let's go down to the 30 minutes time frame. 1 hour, 30 minutes is okay.
Okay.
We can't do 30 minutes as another disadvantage. You're right. We might not be able to explore all of the time frame. And there are certain things that are clearer on a smaller time frame. Right. So there might have been a trade within here that we can't see. Okay. Because remember, you can always use sweep, break, and SLQ, mark out your QM, or you can use what? Other blocks. Okay, other block is another entry that we use, right? And basically for your other block, remember what I said, you always want to see a sweep as well. And then you want to see liquidity above it or below it. This is your sweep, this is your break of structure, this is your other block right here. Last green candle that lets this push to the downside and broke structure, right? But if we could get on a smaller time frame, would have, if we could get on like the 30 minutes time frame, we would have been able to see this liquidity here that is just below it. We would have been able to see it clearer. Okay. But unfortunately, we can't. So I'd already seen this on H1. Okay. So there's a sweep. But on a 30 minutes time frame or 15 minutes time frame, this would be a lot clearer for us. Okay. Because this might actually not have been the sweep. This might have been the sweep here, up here. You get, this might have been a swing high on a smaller time frame. You get, because this sweep is actually far away. You get, but you can see that obviously a sweep happened here and there was a break of structure to the downside and there was structural liquidity left behind. There was liquidity left behind here. You get, but we are not seeing it clearer. We are not seeing it clearly on the 1 hour time frame. Okay, but on a smaller time frame, 30 minutes, 15 minutes, you would obviously see that this was a trade. And you'd have obviously have been able to get in at a what? At a better, with a better risk to reward, because I wouldn't use this entire 1H order block like this. Do you get what I'm saying?
Yeah.
All right. So typically, when you see the sweep and the break to the up to the downside here, your target is where? Your target is probably this one here. Right? That's your target. That's what you want to take out. So you typically have your entry here. I'm using the 1 hour order block. Okay. But obviously, we could have gotten a better trade. And then your TP, your first target will be here. Right? That will be your first target. This is 1 to 3.66. Okay. Now, bear in mind, you could actually say you want to go like this all the way and get 1 to 53 RR. You can do that if you can stomach it and hold it. This is 29th of December. Would you be able to hold the trade for 4 months? Again, you are not the market, because the market can typically do what? Hit the target and then decide to come back up and come and test this POI again before dropping. Do you understand? Yeah. But obviously, if you can hold this market all the way till it takes this out, you'll be good. All you'll just be doing is doing what? You'll be adding positions each time the market pulls back. Okay? So now let's continue watching on the 1 hour time frame. Let's see. Do we see? Clearly, we are looking for sales, only sales. Okay, so let's see again. Do we see any place where you have a sweep and a break of structure to the downside? This is another sweep here. You know, this is a swing. This is a sweep.
Yeah.
Right? So this sweep and break of structure, very, very important. I've said that countless number of times. Right? This sweep and break, very important. Liquidity, very important. Okay, this is your protected high. Price just wicked it a little bit, can you see? And then started dropping. Now, but this one, you see that, okay, on this time frame, it's difficult for me to actually pinpoint and say, okay, this is the structural liquidity, right? But if I go to the lower time frame, I'll be able to do that, right? It will be a lot clearer, okay? So for me now, I'm just going to select this as a structural liquidity, okay? And then you could typically use what? You could use, I can say a QM here, QMR here. You could use the QMR or you could use this order block. But obviously, if I'm on a smaller time frame, okay, let's try the 30 minutes. I'm not sure if, let's go to the 30 minutes. Let's see if we can get the 30 minutes time frame here. Okay. Oh, no. No, we can't.
I think only the MT5 is
yeah.
shows long history.
Yeah, but I don't have MT5 on my system. I'm not logged into my accounts on laptop. I only use phone here. But maybe something I could check and then we could see. Because right here, there will actually be a QMR here on a smaller time frame. I'll be able to mark it out very well. So it could have been this. So maybe we use this QM instead of saying we want to use this entire order block. Do you get? So this might be the QMR this week here. On a smaller time frame, it will be, there will be a last green candle there. You get, right?
Yeah.
But let's just stick to the other block because I'm not seeing what the lower time frame is doing. But clearly I'm saying the sweep and the break of structure. So I know that yes, price will give a reaction at that point in time. Do you get? So I'll just use the other block. So you could have taken your entry here. Well, that won't have been the true entry, but let's just put it there. And then your stops just slightly above your protected high. And your target is where? Your target is going to be this lowest point within that trading range. That would have been your target right there. That'll be your TP1 right there. Let me change this one back because obviously we are not going to hold the trade all the way to that point. Okay, maybe you can hold maybe like 10% of it, but obviously if you are stacking, it is easier to do closer than to
Based on our, I think, last class,
Mm.
it's safer to do like one to three, right? Then
Yes,
keep
1 to
the
3. Yes.
okay.
Then keep 10% to wherever you want to hold price to. Okay, so this would have been a 1 to 3.6. This would have been a 1 to 5.0 because this is my TP1. So at this TP1, I'm going to close a bunch of it. Okay, but let's keep looking on the 1 hour time frame. Do we see this is another sweep here that I'm saying here? This is a sweep, right? Even though this one, I'm just using experience to say that this is a sweep, right? Because remember, your sweep should be a swing high or a swing low. Basically, this is what you want. You want this, okay? Like a swing, not a candle, right? But I know this is the 1 hour time frame. This would be a swing on a lower time frame, okay?
Okay.
Do you understand what I'm saying?
Yeah, I do.
Okay, like this is a swing now, like swing, okay? But this one is just a candle, but on a smaller time frame, it will be a swing. So let's see if the price tagging here, because I'll mark this out as my structural liquidity, and this is my protected high here. Let's see, maybe at any point in time, price came there, maybe. Doesn't look like. Okay, so price never came there. Let's continue. I'll just leave that point marked out. Let's continue. Let's see. But obviously, you can see supply is still in control, right? Clearly.
Yeah, very clear.
This is another sweep. Okay, I'll probably use this as a sweep. Well, let's see what H4 looks like here. Okay. And I'll use this as my structural liquidity. I'll use this as my protected high. Let's see the price coming to the POI at any point in time. Let's mark out last green candle. Maybe I use this candle. I'll still drop down to the 1 hour time frame. I'm just trying to. So price never came there, but the S was structural liquidity taken out. See, liquidity is resting everywhere here. Like it's like equal highs. Let's see. The price might come here in the future. Like this zone is very strong. This zone is very strong. Very, very strong. Because you have highs here. This is one high, this high, this high here took out this high.
Yeah.
Right? So I could actually delete this. And we could use this instead. Okay? This high took out this high here. So there's no money here again. But there's money here.
Okay.
It hasn't been taken. There's money here. There's money here. There's money here. Not taken. You can see this point, this candle here hasn't been taken. Right? There's money again here. So look at that. There's money resting everywhere above here. Typically, what will price do in the future? Price will come back here and give a massive reaction. So I would not be surprised if this guy actually buys all the way here before now taking a final drop to take out this low. I will not be surprised. Do you get? Because you have a lot of stop losses here. You have a lot of orders here. This guy here took out this guy and broke structure to the downside. Right? So I know that this is another trading range. Now let's drop down to the 1 hour time frame. Okay, this is another trading range right here. Right? I could mark out my what? Last green candle all the way. You see that? You see how we're investigating? Now, this trading range, where did it start reversing from? This point. That's the target. Are you following me now? Again, I would always say sweep and a break. You must find it best. Like must. Okay? Must. That one is a must. All right? Then see what price did here. Now, here, price now came in, tapped in, and started dropping. But technically, there is no structural liquidity here. Right? It's not technically, there is no structural liquidity here. So you would have dropped on a smaller time frame. You allow price tapping here. You won't take a direct entry. Then you drop on a smaller time frame. Let's check 30 minutes. Let's hope 30 minutes is available. Okay, perfect. Now you drop on a 30 minutes time frame, and you now look for that model on a 30 minutes time frame, right? Because you didn't take an exact entry here. Okay, so you look for it here. So at this point here now, liquidity is resting everywhere here. Okay, and this is my order block. After price tapped into that H1 order block that we didn't take the entry on. Why? Because there was no structural liquidity. There's structural liquidity, but it's far off from my protected high. Okay, so it's at this point, you know that liquidity is resting everywhere here, right? Liquidity is resting there. This is now my protected high. This is where I will wait for. So let's see the price. Fantastic. I hope you are following me on this one. This is my protected high here. Okay. So there are some times, I say this a lot. There are times that when you have an order block without structural liquidity or without liquidity around it, you have a POI without liquidity around it, you simply wait for the model to form there before you now take a trade. I think I showed you, what's it called? I showed you the breaker block entry on gold, right? Exactly. So it's the same thing. So here now, where is my target? This is my range now, right? The target for this trade, my TP1 is here. This is the target. So let's see. The price take this out at some point. See that? Price took it out. The price ever take out my high, my protected high, assuming that you even left it, assuming. Price never did.
Yeah.
Price never took out the protected high. Never, until that target was taken. So what do you think is resting here? Now, this brings me back to this POI that we saw here above here. You have a lot of orders resting here. A lot.
And they must be taken.
They must be taken. So price will come here, tap in here, and the reaction to the downside will be massive. Just know that. All right, so this is something that you want to keep an eye on, because price will definitely come back here and give a huge push to the downside, which is probably what will now take out this higher time frame targets that we marked out on the daily. Do you understand what I'm saying? So now you can see what we did here. We didn't take an entry at this point, right? Why? Because there was no liquidity. We allow price come in there and then form the sell model again, this time giving us liquidity on the 30 minutes time frame. And I'm using the order block, the supply zone here that was left behind here to take the trade. Okay, and this is a bunch of liquidity. You can see there was a break of structure here, right? So you know This is liquidity directly below my point of interest here, right? So what did price do? Price came there, tapped in, and then started dropping. Now, obviously, again here, after price reacted at this zone, I can take another entry because technically there was now a sweep. Okay, let me take it step by step. Let me put the sell position here on this supply zone. My stops just slightly above. My targets all the way here. Now, obviously, you'd have been taking partials. Do you get? So it's only your runners you will leave up all the way to this point. Because holding this trade from 13th of February till he hits his targets, let's say here, 13th of February to 4th of April. Can you hold it? You can't, right? But you know the overall direction of the market, right? You know it's bearish. So you could have taken maybe partials at this level here, this swing low here. Remember, our swing lows and our swing highs within our trading range for the way we trade are our take profit points. Okay, so within this trading range from here to here, my take profit points are this swing lows here. This is one, TP1. Now, what typically happened? Price came to TP1 and then reversed. That's my first take profit point. TP2, TP3. You can see again what happened here. Price took TP3 and then reversed. So these are points where you'd have been taking partials. And my final, then maybe I'll take partials here as well. This level, I'll take partials, and then the final level. So I'm just trying to show you this, right? So you understand. So our swing lows in this case is those are our take profit points, the way we trade. Okay, our swing lows are our internal liquidity. Okay, and this is our external, this point and this point. Whatever swing lows we have in between this trading range is our take profits. Those are our take profits. Okay, so here again, you'd have gotten another trade. Okay. Now, no, sorry. Yeah, here, this point, we didn't take a trade here. This point, we would have taken the trade. Now, this was a sweep, right? This point was a sweep. Now, where's my structural liquidity within this leg? This, let me delete this point as well. This is my structural liquidity right here. Okay. And this is my order block on the 30 minutes time frame. This is my order block. See, price came there again. Let me move this slightly away. Okay, and this is my protected high. So basically, structural liquidity being taken out is another beginning of a trading range for another entry. Okay. Those are your pullbacks. Do you get what I'm saying? Because you know that there was liquidity here. Price took out that liquidity and broke structure to the downside, correct? That is a beginning of another trading range. So in this level now, I have taken a trade, I'm selling. Price does a pullback. I will still use that range. This is my structural liquidity. This is my protected high. This is my liquidity sweep. Okay, this level that got taken here, that's my sweep, right? I can take another entry from there, right? So now, where is my TP for this trading range? It is the lowest point within that range. This will be my TP, right? So I've entered this one. I will still come here again to enter this one. My stops slightly above, okay? My take profits, first TP, this level. Do you understand?
Yeah.
You can see it got there, right? This is also liquidity that was taken. And this was a break of structure to the downside, this level. So that's the trading range. Again, So actually, again, and you can see what happened. I hope you are following me. You can see what
Yeah,
happened
yeah.
here. This was liquidity taken. This was also a liquidity here taken. Okay.
Yeah,
So now, as a
yeah.
result of this, I entered this. Now, again, as a result of this, I will enter another one. This is my structural liquidity here. This is my POI here, which is what? This other block, unmitigated weak, right there. This is it. Okay, let me send this to back. This is my protected high, right there. I don't expect price to pass that level. This is my trading range for this range, from this point to this point, when price started to reverse. That is my take profit. So if I take price here and I enter at this structural liquidity here, at this structural liquidity, my SL is slightly below this unmitigated week. This week, slightly below. And then my take profit is where? This point right here. Do you understand what I'm saying?
Yeah, very clear.
It's clear, right? So remember, same rule, sweep, break, SLQ, right? From this point on the 1 hour time frame here, from this point, or let's use this 30 minutes time frame, from this point, this was our QMR here that we marked out, but there was no structural liquidity. Okay, so we waited for price to react to this order block first, to this bearish order block. Price reacted to the bearish order block, right? And dropped downward, leaving us with what? Structural liquidity above this supply zone. Okay, which we marked out here, above this zone. Now, we now waited for price to do what? Come back there, take out our structural liquidity, and tap into the supply zone. That was trade one. Okay, but now when price was coming, price basically swept liquidity, right? This is liquidity that was taken, SLQ. This is one here as well. This point, you can see this is a swing high. So price took out the liquidity and then broke structure to the downside. Okay. Within this trading range, this is my structural liquidity. This is my POI here, this bearish order block. Price came there, tapped in, and this is the target. I expect price to take out this target. But again, as price was coming there, price swept liquidity again and broke structure to the downside. And this is my structural liquidity. This is another trading range. Remember, a trading range is formed when liquidity is swept and there's a break of structure to the opposite direction. So I had another trading range here. And at what point the price start reversing to this point of interest? At this point, that is the target for this trading range. So basically, you can have a trading range in a trading range. Do you understand? So this is how it is. This is how it happens. And this, when you find this kind of setups like this, these are typically your A+ setups. All of them are reacting like this. Why? All because of this single 1 hour order block that we marked out here that had no structural liquidity below it. Okay? So now, see how many trades we've taken, right? Let's keep looking on the 30 minutes time frame. We want to find the same thing, sweep, break of structure to the downside. This is another sweep here. This candle took it out. And this is a break of structure to the downside. Remember, the goal is to mark out everything, win or lose. We don't care. Okay? And this might be our structural liquidity. But this would have been a loss, right? Because we might not have covered the high. Now, this is another sweep here. This is a break of structure to the downside. I'm working on the 30 minutes now, not 10 more. This is our structural liquidity. We would have marked out this level as a supply zone. Price gave a tiny reaction and then failed. Okay, let me see X. So we would have had a loss here. Would have had a loss here. Right? I'm just trying to follow through based on, are we seeing anything here? Okay. This is another sweep here. This is how you backtest. Be real. This is a break of structure to the downside. This is my structural liquidity right here. This is my protected high. This is my point of interest. If I mark out the entire supply. So let's say the price react at this level at any point in time.
I don't know if we are,
If we are what?
I don't know if we had a break of structure there.
Where? Yeah. This is a break of structure. Sweep, break of structure. You can say body close. This is a swing.
Yeah.
Yeah. So it's fine. Okay. This was really, really close. But price still came and tapped in here. So you see that I'm just sticking to one time frame here, only one time frame, right? So you know that liquidity, orders are resting here. Here, order is there. Here, order is there because we didn't take it out. Then price now came in, tapped in here. So now within this, my trading range, typically within this trading range, where should my target be? My target should be right here. Okay, here. That's the lowest level price got to before.
Reversion.
Okay. Right here before the reversal, right? But remember what we said, you will still be taking partials along the way. Do you get? Not like you try and leave it to that final target. Okay. So here now, I'll count this as a win, but this would be where I'd have entered at this POI. My stops just slightly above. And then this is where I'm supposed to come and take profits, right? Final TP based on that trading range. But I'd have taken partials here. You can see this is a swing low. I'd have taken partials here. Or yeah, I would have taken partials here. Or maybe the next one might have been around here because they're like equal lows here. Next one would have been here. But obviously, you can see price didn't get there. So even if I are taking partials here, this is still good profits. It meets our criteria, right? This is 1 to 3.8. 3.8 is above 1 to 3. So this meets our criteria, right? And if you are taking price all the way to this place, it will have been around maybe 1 to 6, thereabout. Okay, 1 to 7. You can see, right? But I don't care about it because price has already played. You never know where price will make a U-turn, right? So I don't care about it. So this would have been a point where I would have taken major profits. And then if I'm leaving the rest, I'll typically do what? Set to break even. Okay. So now here again, let's come all the way to this place again now. Remember, I'm still on the 30 minutes time frame. And the reason I'm still on 30 minutes time frame is because, like I said, things are a lot clearer on like H1, M30, M15, M5, right? But here now, we've been dealing with what? This same level. You see? Now, this is why I know that price is going to come back here. And the drop from here is going to be massive. Like I said, there's a lot of orders. You have a lot of orders resting here. Okay, so let's drop down to let's go back to the 30 minutes time frame. Excuse me. I want to look for the same thing, sweep, break, blah, blah. Okay, so here again, we've taken this trade. We've done our 1 to 3. Here, I'm saying what? This is a sweep.
Yeah.
This is a break of structure to the downside. This is my structural liquidity right here. Let me see if it's possible to drop down to the 15 minutes time frame. I don't know if 15 minutes will be. Okay. 15 minutes is available. Okay, so see what I was saying, that on the lower time frame, you get things a lot clearer. This would have been the sweep because that's the swing there, the true swing. Okay. And this would have been my structural liquidity, this point. Okay. And this would have actually been my break of structure right here. Okay, this is a type B, and this would have been my strong high or protected high. And then I'll use what? The supply body, this one. So you see price actually tapped in. I wish I could get 5 minutes. You would have seen things a lot clearer, but I know that certainly I can't get 5 minutes. Certainly. 23rd of March. Let's see. Let me try 5 minutes. I get it. If not, you'd have seen things a lot clearer. Okay. So dropping down to the 15 minutes time frame, we have this, right? So this is my trading range. This is the sweep. This is the break. This is probably where I'll take the first TP, right? But look at this. Because I have a sense of idea, I know where price is coming from. I know that this is supposed to, I know price is going to come here to take out this guy. And I know that the overall for this range is this guy. I will still maintain that range. Why? Because my bias is still same. I'm bearish on this guy. Okay. So I would take my entry right here. Put my stops just slightly above. This is my first target in this trading range. This is my TP1 here. My TP1, did it give me up to 1 to 3? No, it didn't. I might want to get exactly that 1 to 3 before I TP1. Okay? Do you understand? That will be my TP1. I might take more partials at this level. This level, TP2. TP3 might be this level, TP3.